Hello, ladies and gentlemen, and thank you for standing by for JinkoSolar Holding Corporation Limited's fourth quarter 2020 earnings conference call. At this time, all participants are in a listen-only mode. After the management's prepared remarks, there will be a question-and-answer session. As a reminder, today's conference call is being recorded. I would now like to turn the meeting over to your host for today's call, to Ms. Ripple Zhang, JinkoSolar's Investor Relations Manager. Please proceed, Ripple.
Thank you, operator. Thank everyone for joining us today for JinkoSolar's fourth quarter 2020 earnings conference call. The company's results were released earlier today and available on the company's IR website at www.jinkosolar.com, as well as on Newswire services. We have also provided a supplemental presentation for today's earnings call, which can also be found on the IR website. On the call today from JinkoSolar are Mr. Li Xiande, Chairman of the Board of Directors and Chief Executive Officer of JinkoSolar Holding Company Limited, Mr. Charlie Cao, Chief Financial Officer of JinkoSolar Holding Company Limited, and Mr. Gener Miao, Chief Marketing Officer of JinkoSolar Company Limited. Mr. Li will discuss JinkoSolar's business operations and company highlights, followed by Mr. Miao, who will talk about the sales and marketing, and then Mr. Cao, who will go through the financials. They will all be available to answer your questions during the Q&A session that follows. Please note that today's discussion will contain forward-looking statements made under the Safe Harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risk and uncertainties. As such, our future results may be materially different from the views expressed today. Further information regarding this and other risks is included in JinkoSolar's public filings with the Securities and Exchange Commission. JinkoSolar does not assume any obligation to update any forward-looking statements except as required under the applicable law. It's now my pleasure to introduce Mr. Li Xiande, Chairman and CEO of JinkoSolar Holding. Mr. Li will speak in Mandarin, and I will translate his comments into English. Please go ahead, Mr. Li.
2020年对光伏行业是备受挑战的一年。上半年我们经历了疫情在全球的扩散和逐渐的缓解，光伏装机需求也先后经历了低谷和快速的恢复。下半年原材料、硅料和辅材玻璃在供不应求带来的涨价，叠加运费和上涨和人民币汇率的提升，各种不确定的因素促成了产业链盈利情况的大幅波动。在这充满挑战的一年里，我们从未停止过通过技术的进步和精细化的管理，持续推动成本优化的脚步。四季度的毛利率基本实现预期，全年的营收和出货量相较去年均有明显的提升。同时，我们的品牌在全球营销渠道的优势在市场波动中进一步体现，全球的市场份额加速提升。2020年四季度的组件的出货量，全年组件的出货量均创下了历史新高。截至2020年底，我们的组件出货量累计达到了70个 吉瓦， 已成为了行业内全球累计出货量最多的光伏组件制造商。我们预计2021年的出货量仍有望保持30%以上的增长。
2020 was a very challenging year for the solar industry, but it kept its momentum for strong growth, despite the year being shrouded in uncertainty as we went through the COVID-19 pandemic globally scale. Although demand for solar installation was affected, and we experienced the domino effect of the global economic slowdown and went through some of the lowest points, we were still able to recover rapidly as restrictions were eased in major markets. In the second half of 2020, shortages of polysilicon and solar glass, rising shipping costs, and the appreciation of RMB, together with the impact of COVID-19, led to significant volatility in the industrial value chain. In a year full of extreme challenges, we continued relentlessly to optimize costs through technical innovation and improved process. Gross margin in the fourth quarter were within our expectations, and both revenues and shipments for the full year recorded significant growth compared with 2019. Meanwhile, our brand and global distribution channels further demonstrated our strong advantages and resilience during market volatility, and we were able to actually increase market share and solidify our leading status in the global PV industry. Our solar module shipments during the quarter and for the full year 2020 both hit historical highs. As of the end of 2020, our accumulated module shipments reached 70 GW, making JinkoSolar the world's largest PV manufacturer. We expect our shipments to sustain a growth rate of over 30% in 2021.
全球经济持续面临新冠疫情带来的挑战，光伏产业凭借其朝阳性和成本竞争力，在疫情冲击下表现了顽强韧性，并实现了快速复苏。2020年全球光伏市场的表现好于预期，新增装机规模容量将约134个 GW， 较2019年同比增长约 22%。疫情期间，各国纷纷出台了基于本国国情的经济刺激计划，为可再生能源产业带来了一波蓬勃发展的机遇。经济刺激意味着大规模的资金投入，这些资金的规划和管理将直接决定经济复苏的路线，并在未来几十年的持续发挥效应。世界170多个国家已针对可再生能源产业制定了具体的政策目标。可再生能源的发展成为国家意志，势不可挡。作为占全球新增光机规模装机约1/3的中国市场，实现2030年碳达峰、2060年碳中和的计划，兼具能源安全和经济发展的两大目标。为实现构建成新能源为主体的新型电力系统，中国从新技术的应用到电力体制的变革都在加速进行。同时，全球评价也带来了储能和分布式光伏的快速发展。遍地开花之后，光伏行业像一辆疾驶的列车，向众生处前行。
As the global economy continued to face unprecedented impact from the COVID-19 crisis, the solar industry has shown solid resilience against the pandemic and achieved rapid recovery amidst positive news and heightened enthusiasm for clean energy. In 2020, the performance of the global solar market exceeded expectations, with newly added installations worldwide of approximately 134 GW, an increase of 22% year-over-year compared with 2019. During the pandemic, governments introduced stimulus packages which ushered in a wave of new opportunities for renewable energy to develop across the global industry chain. Economic stimulus often lead to large-scale capital investments. These investments will most likely determine the direction of the economic recovery now and for decades to come. More than 170 countries in the world have made specific policy objectives to encourage the development of renewable energy, a unified move that has not only boosted the industry but made the move to clean energy solutions unstoppable. For the Chinese market, which accounts for about 1/3 of the world's total new PV installations, the pledge to reach the peak of carbon dioxide emissions by 2030 and carbon neutrality by 2060 cover both considerations for energy safety and economic development by adopting supportive policies and measures in China's near-term decarbonization plans in order to switch electricity generation from fossil fuel to renewable energies as the primary source. China has been accelerating the application of new technologies and the reform of the electricity system. Meanwhile, grid parity worldwide has brought rapid development to improve distributed photovoltaic generation and energy storage systems. Following the proliferation of clean energy globally, the solar industry will continue rolling out its ambitious plans and leveraging all opportunities. So we are in for strong growth momentum over the next few years.
2020年4季度至今，硅料扩产周期较长带来的供需错配，叠加短期 非合理的市场情绪推动硅料价格迅猛上行，同时大宗商品价格上涨，生产成本的压力通过产业链向下游层层传导，组件价格涨幅明显。对此，部分电厂投资商放宽了收益率底线，但上下游各个环节的价格仍在动态的调整和博弈。我们预计或将在今年2季度持续，由于装机的潜在需求仍在等待实施，且产业链绝大部分环节供应充分，组件供应有望待市场动态平衡后再度释放。考虑到行业最短缺的硅料环节足以支撑100个吉瓦的组件生产，短期的供需错配终将走向平衡。我们对2021年的全球装机保持乐观。
Since the fourth quarter of 2020, mismatch between supply and demand drove up the price of polysilicon, caused by the relatively long capacity expansion cycle for polysilicon production and volatile short-term market sentiment. At the same time, with the price increases of bulk commodities, higher production costs were passed down the industrial value chain, which resulted in significant price increases in modules. In response, some investors in solar power generation have accepted lower yields. However, prices in each upstream and downstream segment continue to fluctuate, and we predict will do so into the second quarter of this year. Since installations are still likely to increase, and supply is sufficient in most segments of the supply chain, we anticipate that demand for modules will revive once market prices stabilize. While there are still supply shortages, there is enough polysilicon to support over 180 gigawatts for module production. This will help balance demand with supply in the year. We remain optimistic about global installation levels in 2021.
产业链的持续波动进一步体现了一体化制造企业的抗风险能力。我们紧跟着市场趋势，灵活调整各个环节的生产节奏，同时不确定因素的叠加也是对市场的敏度感高、适应性强的企业获得更大的生存空间。我们正持续优化我们的供应链管理，一方面我们提前与材料供应商签署了长单协议，确保核心材料的供应；另一方面，我们在短缺相对严重的环节协同上下游进行资源互补的战略合作，并积极打造行业生态链的集群。除此之外，我们对潜在的替代性技术和材料保持灵活的跟踪和储备，以最小化的供应链波动带来了市场风险。
The continuous volatility in the industrial value chain further highlighted the resilience to risk of integrated manufacturers. Meanwhile, economic uncertainties continued to concentrate key players and heightened competition for survival of the fittest, and rewarded highly adaptive companies to gain more market share. We closely monitored market trends, adjusted with flexibility each link of the production process, and continuously optimize our supply chain management throughout our network and partners. Firstly, we signed long-term agreements with material suppliers to secure the steady supply of core materials. Secondly, we continued to build symbiotic partnership along upstream and downstream to share resources, especially for segments with more severe supply shortages, and actively establish clusters, forming an industrial ecosystem. In addition, we maintained flexible tracking and storage of alternative technologies and materials to minimize market risk caused by supply chain volatility.
在光伏进入全球评价的时代，公司一头多年来建设的品牌和全球化的营销和服务网络，得以顺利拓展更多的应用场景和商业模式。我们针对全球8大区域制定了不同标准化产业化的储能发展模式。目前已有储能产品出货中东及非洲区域，针对美国、日本的产品也将陆续在2021年下半年登陆市场。同时，全球分销市场的业务呈现快速上升趋势。BIPV 建筑光伏一体化产品已经在国内多个商业地产项目中安装使用， 良好的品牌和团队的高效执行力使得业务快速推进，稳定的供货能力和本地化的售后服务体系有效地保障了产品和服务的可靠性、一致性。
As the solar industry enters the era of grid parity around the globe, JinkoSolar continues to expand successfully with more business scenarios and business models leveraging our brand reputation built on years of global marketing and excellent service. We have established the gained foothold to build specific, standardized and industrialized energy storage development models in 8 major regions worldwide. At present, we have shipped our energy storage products to the Middle East and Africa, and will launch products specially designed for the US and Japanese markets in the second half of 2021. Meanwhile, our business in the global distribution market is showing a rapid upward trend, and our products for BIPV systems have been installed in a number of commercial real estate projects in China. JinkoSolar's renowned brand and expert teams continue to drive the successful execution of our business, from stable supplies of global customers to localized after-sale services that guarantee the reliability and the consistency of our products and services.
我们致力于产品的创新和产业布局，提速碳中和。在未来1到2年，我们的技术目标是实现 N 型单体电池实验室最高效率 25.5% 以上，叠层电池最高效率 29% 以上。截至目前，我们的新一代旗舰产品 Tiger Pro 已累计签单超过10个 G 瓦，这是目前产业链成熟度与高效率大尺寸产品的最佳匹配。我们预计 Tiger Pro 系列产品将占我们今年总出货量的 40% 到 50%。此外，金科能源也积极储备光伏制氢、光储一体化等光伏加的产业技术，引荐领先的技术创新能力，推进安全高效的能源的建设。
JinkoSolar is committed to promoting the acceleration of carbon neutrality through product innovation and operating excellence. Over the next 1 or 2 years, our technical goal is to reach the highest laboratory efficiency of 25.5% for the N-type monocrystalline silicon solar cell and 29% for the multi-junction solar cell. So far, our new generation Tiger Pro flagship products have accumulated orders of over 10 gigawatts. Tiger Pro provides the best match between maturity of the industry and high-efficiency large area products. We expect the Tiger Pro series to account for 40% to 50% of our total shipments this year. In addition, we will continue to leverage our leading technical innovation capabilities to promote the development of safe and highly efficient energy systems. In response to increasing demand of this space, we have been actively deploying solutions for the solar plus industries, such as technical storage for photovoltaic, hydrogen production, and integrated PV storage smart system.
我们看好光伏市场的中长期增长空间，并持续投资在各个环节具备技术和成本竞争力的新产能。综合技术成熟度、稳定性和多方因素，预示公司2021年年底的单晶硅片高效电池和组件的产能分别达到33、27和37个 G 瓦，以满足下游对高效产品不断增加的需求。预计2021年我们的一体化市场比例将保持不低于 75% 的水平，这是我们在面对供应链波动、技术更新换代时有更强的抗风险能力，并助力经济效益和盈利水平的提升。
We remain bullish on the mid to long-term growth of the solar market space and continue to invest in new production capacity with technical and cost competitiveness. Taking into consideration multiple factors like technical maturity and stability to meet increasing downstream demands For high-efficiency products, we expect our in-house annual production capacity of monosilicon wafers, high-efficiency solar cells, and modules to reach 33, 27, and 37 gigawatts respectively by the end of 2021. We expect the proportion of our in-house production capabilities to reach over 75% in 2021, which will enable us to become even more resilient to risks and continued volatility of the supply chain and technical upgrades. This long-term investment in our business will help to optimize operational efficiency and increase profitability.
话交给接纳之前，我来介绍一下业绩指引。2021年第一季度，公司的组件出货量在 4.5 个 G 到5个 G 瓦之间，营业收入在 11.8 亿美金到13亿美金之间，毛利率在 12% 到 15% 之间。基于当前的预期，2021年全年的出货量包含硅片、电池和组件在25到30个 G 瓦之间。
Before turning over to Jenner, I would like to go over our guidance. We expect total solar module shipments to be in the range of 4.5 gigawatt to 5 gigawatt for the first quarter of 2021. Total revenue for the first quarter is expected to be in the range of $1.18 billion to $1.3 billion. Gross margin for the first quarter is expected to be in the range of 12 to 15%. Based on current estimates, the full 2021 shipments, including wafer, cell, and modules, to be in the range of 25 gigawatt to 30 gigawatt.
Thank you, Ms. Li. In the fourth quarter of 2020, total shipments of solar modules reached 5.8 gigawatts, and for the full year of 2020, total annual shipments were 18.8 gigawatts. Even though supply and demand remains volatile, we were still able to reach our shipment target for the full year 2020. Our modules were shipped to nearly 160 countries and regions in the world, as our overseas markets remain our main shipment destinations, with the Asia Pacific, US, and Europe accounting for the major portion. Shipments in Asia Pacific achieved a significant growth of over 60% in 2020. During the fourth quarter, we strategically increased the portion of shipments to emerging markets in order to capture growth opportunities as these economies gradually recovered from the pandemic. Our well-recognized solar brand, global network of localized real-time customer service, quality products, and advanced technology were major assets that helped mitigate risks and increase our global market share in 2020. Shipments of high-efficiency monocrystalline products increased significantly from 74% in 2019 to nearly 100% in 2020. In May 2020, we launched a new generation of flagship products for the Tiger Pro series, leading the industry to fully enter the era of ultra-high power efficiency above 500 watt peak. As technology innovation continues to accelerate products iterations, we estimate that shipments of Tiger Pro modules will reach 40 to 50% of total shipment in 2021, which will greatly reduce the LCOE for the customers under same conditions. Recently, we launched a new ultra-high efficiency Tiger Pro product specially designed for distributed DG market and well suited for a wide range of distributed scenarios, including industrial and commercial rooftops and residential rooftops. In the future, we will continue to launch premium PV products and diversified solutions, and continue to expand our brand influence in the field of distributed generation segments. In the recent price hikes along the supply chain caused a correlated increase in module prices and pressured downstream installations demand. However, we believe the short-term price rise will have relatively limited impact on demand, following China's pledge to achieve peak carbon emission by 2030 and carbon neutrality by 2060. State-owned enterprises were assigned a mandatory target for renewable energy installation. According to client feedback, several major Chinese SOE investors have already lowered yield target for the power generation projects, bringing strong installation expectations for the downstream market. We believe that newly added PV installations will sustain significant growth momentum in 2021. In the mid to long term, global transition to clean energy will become irresistible as more and more countries launch policy and goal to cut carbon emissions. Demand-side incentives are expected to partially offset cost pressure. The solar industry will continue its strong growth momentum. Next, I will detail each region's market trend. In China, 2021 is the first year of the 14th five-year plan, and it is also the first year for the solar industry, except the residential sector, to enter into the era of grid parity without subsidies. In one aspect, according to the new 2021 policy draft, projects should be won through bidding. Otherwise, new installation would be approved as a result of reductions of subsidies on existing projects. This will lead to lower price projects going forward, and increase the solar generation capacity will further drive down the cost of solar power. Furthermore, because delayed projects not connected to the grid by June 30th will lose subsidies, this will account for the most of the connections to the grid this year. Including residential projects worth 10 gigawatts, the Chinese market is expected to achieve a growth rate of 25% year-over-year, in new installation reaching 55 gigawatt level in 2021. Average annual installations during the 14th five-year plan is expected to reach 70 to 90 gigawatts. According to the latest report of Bloomberg New Energy Finance, new solar installation capacity in the U.S. reached a record high of 16.5 gigawatts in 2020. The solar industry showed tenacious vitality in the midst of the pandemic's doom and gloom atmosphere and economic contraction. President Biden has announced that the U.S. will rejoin the Paris Agreement, and the House of Representatives has reintroduced the Green Act, a critical bill that includes a 5-year extension of solar investment tax credit. The economic recovery policy in the post-COVID era and the accelerating decarbonization of the U.S. energy system will further enhance the attractiveness of solar power and energy efficiency. In 2021, newly added solar installations are expected to exceed 20 gigawatts for the first time. Compared with other renewable energy sources, the price of solar power in the U.S. is very competitive, and the market competition is more rational because of its unique supply-demand relationship and market entry rule. We are confident about maintaining our leading position in U.S. market with our stable supply capability, excellent customer service, and high-quality product advantage. In 2020, our shipments in Asia-Pacific market reached a historical high, with Vietnam contributing the largest growth in the shipments. Affected by expiration of old FIT projects, Japan rushed to install a large number of projects in September 2020. As the economic advantage of rooftop projects continue to grow in Japan, rooftop solar power generation is expected to replace utility-scale projects and become the main source of the newly added power generation capacity for the country. Affected by some adverse factors, including the pandemic and excessively high electricity costs, new installations in India experienced a decline. However, it is worth mentioning that Ministry of New and Renewable Energy will impose tariff of 40% and 25% on solar modules and cells, respectively, from April 2022. This move is expected to stimulate a new round of installation rush before the deadline. Demand in other markets in the region, such as Australia, is expected to remain stable. According to the European market outlook for the solar power, 2020 to 2024, published by Solar Power Europe, The European market reached 18.7 gigawatt of newly installed solar power, producing a double-digit growth of 11% in 2020, the highest growth rate since 2011. In terms of market performance, the new Renewable Energy Source Act will benefit the development of rooftop installation in Germany, the long-established leader in solar generation, and the residential energy storage is expected to become another emerging growth driver. The spotlight was on Spain in 2020 as the country led Europe's subsidy-free market growth and became the third largest solar market in Europe. In January 2021, Spain awarded a total of over 3 gigawatt solar and wind power capacity in the first renewable energy auction held since 2017, with the lowest LCOE for solar at $1.8 per kilowatt hour. In addition, solar market in Netherlands, Poland, and France all maintained solid momentum. We remain bullish on the long-term development of the European market. Most countries in emerging markets like Latin America and the Middle East are actively promoting solar power projects. Applications for solar power generation has been extensive and a major driving force for solar power development in emerging markets. Brazil's state-owned Energy Research Office recently announced that it has registered a total of nearly 67 gigawatts of renewable energy projects for auction in June this year, including 1,050 solar projects with a total capacity of over 41 gigawatts. The Dubai Supreme Council of Energy recently announced a significant increase in renewable energy share of Dubai's total energy mix. Following a strong recovery from the severe impact of pandemic, emerging markets are expected to become a powerful contributor to the development of the global PV industry. We see solar generation becoming widely popular in more and more countries, and the growth of the global solar market will no longer rely on single or dominant market like the US, Europe, or India, and will continue to diversify. The general trend of the global clean energy transition will open up a new growth cycle for solar plus energy storage projects to achieve cost-effective integration of flexible resources in smart distribution grids. At present, we have developed diversified solutions for our residential, C&I, and utility customers in our major markets around the world. We will cooperate with leading companies in the energy storage supply chain to accelerate deployment to the entire energy storage business chain. Recently, we won overall High Achievers Award in the 2020 Photovoltaic Module Index report published by the Renewable Energy Testing Center. Our high performance across 3 essential indicator categories, reliability, performance, and quality, demonstrated our commitment to product excellence. As the world's first global solar manufacturer to join RE100, JinkoSolar was the first company in the industry to sign the Global Framework Principles for Decarbonizing Heavy Industry. In 2021, we will strengthen our distribution channels, expand our network of value-added customer service, and bring greater value to our global customers with high-quality, reliable modules and premium services. With that, I will turn it over to Charlie.
Thank you, Jeter. In the fourth quarter, rising costs of raw materials and shipping costs combined with RMB appreciation put pressure on our profitabilities. Gross margin was 16% or 14.3% if excluding the reversal benefit of AD and CVD, in line with our guidance. Our long-term competitive advantage in branding and distribution channels, and demand for our high-efficient products and customer services have helped to partially offset pressures from the upstream price volatility. As costs along the supply chain stabilize, our highly efficient production capacity release and better integration will continue to give us a competitive edge in the industry. Let's go into more details about the quarter now. Total revenue was $1.4 billion, a decrease of 1.1% year-over-year. Gross margin was 16% compared to 17% in the third quarter of 2020 and 18.2% in the fourth quarter of 2019. Excluding the AD/CVD reversal benefit, gross margin was 14.3%, in line with our previous guidance. Total operating expenses in the Q4 were $220 million, an increase of 51% sequentially and an increase of 26% year-over-year. The sequential and year-over-year increase was mainly attributable to an increase in disposal and impairment losses on equipment as a result of company's upgrade of production lines. Total operating expenses accounted for 15% of total revenues in the fourth quarter of 2020, compared to 10.8% in the third quarter of 2020 and 11.9% in the fourth quarter of 2019. Operating margin was 0.8% in the Q4, compared to 6.2% in Q3 and 6.2% in Q4 last year. EBITDA was $100 million, compared to $144 million in the third quarter. Non-GAAP net income was $5.1 million, a decrease of 92% year-over-year, which translates into non-GAAP diluted earnings per ADS of 11 cents. Taking into account the loss from the change in fair value convertible senior notes and call option due to the sharp increase in stock price of company in Q4, GAAP net loss was $57 million. I'll brief you on our 2020 full-year financial results. 2020 was dramatically stronger compared with 2019. Total solar module shipments were 18.8 gigawatts, up 31% year-over-year. Total revenues were $5.4 billion, up 18% year-over-year. Benefited from an increase in shipment of solar modules and production volumes of our integrated high-efficient capacity, as well as cost reduction from company's industry-leading integrated cost structures. Gross profit for the full year was $945 million, an increase of 13.6% year-over-year. Gross margin was 17.6% compared to 18.3% in 2019. Excluding the AD/CVD reversal benefit, gross margin was 17%, flat with 2019. Operating margin for the full year 2020 was 5.1% compared to 5.8% for the full year 2019. Operating expenses were 12.5% of total revenues in 2020, flat with 2019. EBITDA was $463 million compared to $376 million in 2019. Net debt to EBITDA ratio was 3.4 times. Non-GAAP net income was $147 million compared to $139 million in 2019. This translates into non-GAAP basic and diluted earnings per ADS of 3.28 cents. Moving to the balance sheet. At the end of fourth quarter, our balance of cash and cash equivalents were $1.2 billion compared to $943 million by the end of third quarter, and our cash levels significantly improved. AR turnover days improved to 50 days compared to 61 days in Q3. Inventory turnover days were 97 days, flat with the third quarter. Total debt was $2.8 billion compared to $2.5 billion at the end of third quarter and $1.9 billion by the end of last year, in which $115 million was related to international solar projects. Net debt was $1.5 billion compared to $1.59 billion third quarter and $1 billion by the end of last year. In September 2020, we announced our plan to list our principal operating subsidiaries, Jiangxi Jinko, on the stock market in China. By the end of October 2020, Jiangxi Jinko completed an equity financing of RMB 3.1 billion. This process is progressing smoothly. This concludes our prepared remarks. We are now happy to take your questions. Operator, please proceed.
Thank you. Ladies and gentlemen, we will now begin our question and answer session. If you have any questions for your speakers today, please press 0 followed by 1 on your telephone keypad and wait for your name to be announced. If you'd like to cancel your request, please press 0 followed by 2. Again, that's 01 on your telephone keypad now. As a reminder, everyone, that's 01 on your telephone keypad to enter the queue. Your first question is from Philip Shen, who's from Roth Capital Partners. Your line is now open, Philip. Please go ahead.
Hi, everyone. Thank you for taking my questions. With Q1 over now, can you talk about what you see for pricing in Q2, as well as shipments and margins? I know you have not provided official guidance, but any color on the Q2 outlook would be very helpful. Thanks.
Hey, Philip, and the pricing, from the pricing perspective, the input cost continue to be relatively high, given particularly the polysilicon, the supply bottleneck. And we are seeing, the rebalance, negotiation with our customers, and the module price and globally, including China, are on the, I think, in a trend to go up, to absorb, to reflect, the input cost, the impact. So, we didn't give the guidance of second quarter, but I think, overall, the gross margin to be relatively stable throughout the first half of the year. But we are, expecting some positive factors like, the solar glasses prices, the market price is down. The RMB, the depreciation, looks like, it's positive, and to offset some, the input cost pressure from, specifically the polysilicon impact. But I think that it's a little bit, impact on the global demands from the module perspective because of the high, input costs. And I think most of the tier 1 companies like to balance the shipments versus the module shipments versus the high input cost. And so I think, the shipments, we are not expecting, the tier 1 companies the second quarter, and quarter by quarter shipments will have significant increase.
Okay, thanks, Charles. So, and then
I think, hold on, Phil.
Go ahead, Jenny.
It's Jenny. So, so regarding the shipment, I think you might have noticed our disclosure of the shipment targets includes a total shipment instead of a module-only shipment, which reflecting our strategic flexibilities, because right now we see the unbalanced demand supply from upstream to downstream right now. So that's why, like what Charlie just saying, our shipment target are still in line with what we planned, but we are keeping some flexibilities between wafer, cell, and modules in order to mitigate the market risk and try to optimize our margins.
Thanks, Jenna. I did notice that, and was wondering if you could share a little bit more on that, Jenna. Specifically, how much wafer-only sales or cell-only sales could we see, so that we can get to a more accurate module-only or module shipments in 21. Thanks.
We don't have that number yet because we are keeping that flexibilities to make sure that we can adapt our strategy to the current polysilicon price hike. That's why we keep that as a flexible part. But in general, we are still taking module as our main business. But partially of our shipments will be wafer or cell. It depends on the margin on the spot market.
Okay, thanks. One other question for me. You guys added, I think, 16 gigawatts or plan to of cell capacity by the end of this year. Can you give us a little bit more color on that strategy around the capacity expansion and the focus on why you're investing so much in cell? And then help us with the CapEx for 2020 total, and then what you expect it to be in 21. And how much do you expect that to be from partner contributions in terms of the CapEx? Thanks.
The CapEx, in 2021, it's in our range of $1 billion to $1.2 billion, reflecting our investment on the dramatically on the solar cell as well as the wafer stage. And for the strategy of solar cell, it's reflecting our in a couple in the recent 2 or 3 years, we didn't increase our solar cell capacities because we think the technology is not so matured in the last 2 or 3 years, and now the market is shifting the bigger size, high efficient, and N-type the solar cell technology, and we believe it's a time to increase our solar cell capacity and increase our integration levels. And that is why, we increase a little bit more on the solar cell capacity in 2021.
Great. And the 2020 CapEx, Charlie?
2020, I didn't have the exact number, but I think it's roughly, $5 billion. Oh, sorry, it's $500 million.
Okay. Great. Thank you. I'll pass it on.
Thank you, Phil.
Thank you. As a reminder, if you have any questions for your speakers today, please press 0 followed by 1 on your telephone keypad and wait for your name to be announced. If you wish to cancel your request, please press 0 followed by 2. We'll pause for a moment to build up the queue. Thank you. As a reminder, ladies and gentlemen, if you'd like to ask a question, please press 0 followed by 1 on your telephone keypad now. Your next question is from Brian, who's from Goldman Sachs. Your line is now open, Brian. Please go ahead.
Hi, guys. Thank you for taking the question. I have a couple questions. First,
hello?
Hi, can you hear me?
Yeah,
Yes.
your voice is breaking, right? So.
Is it better now?
Yeah,
It's better. Please go ahead.
Yeah. Thank you for the questions. This is Grace on for Brian. I have a couple questions. First, just wonder how far in advance are you booked for modules, and is there flexibility in pricing, or were you not able to raise pricing until like the second half of 2021? Thanks.
Thank you for the question. I think for the module price, one side we have the firm commitment and for the contract we sign, but also we always keep a portion of our capacities to the spot market to adapt ourselves to the volatile market changes. So for the contract signed part, we are doing our best to respect the contract, the legal commitment. But since we have a long-term partnership with many customers for years, so we are still talking to many of them, try to get their, let's say, help and flexibilities to work together to face the current challenge in the market. So that's on progress. Does that answer your question?
Yeah, thank you. And how far in advance are you booked for the module for 2021?
I think over our order book are more than half booked, but it's still, some of them are with firm commitment, some of them are with flexibilities, with framework contract only. So, yeah.
Okay, great. Thanks for the color. And I guess my second question is now that there are more details around the China 14 5-year plan, you talked about expectations for like 55 to 65 gigawatts. So I just wonder how are you thinking about the demand picture here, like in terms of like what could drive upside or downside?
Sorry, can you repeat that? What's the upside and downside for what?
For China demand, what could drive like the upside or downside?
Yeah, so I think right now in short term, we did face some challenges because of the unbalanced growth of the capacities, like our pre-marked, earnings speech. The growth of upstream capacity is much slower than the expansion of the downstream demand. So it's caused short-term turbulence and volatile market situations right now. But in long term, we are still a believer for the long-term growth of the market, including China market and other markets as well, because we see a very ambitious target announced by China government, and we have accepted a very clear signal from our downstream customers about the ambitious pipelines in China. So the current challenge is the short-term market imbalance, the supply and demand happened in upstream, but we expect that it could be resolved in the next, let's say, short-term or midterm, because the China, let's say China grid parity projects always got a long time to after the PPA signed to get grid connections. So I think, the market will adapt itself based on the market principles, and the China market together with the global market demand will continue to be very strong and at a high speed growth. Okay,
thanks for the color. And if I can squeeze in one more, I just wonder how should we think about like the OpEx in 2021? Should we think about as a percentage of sale, like around 12 to 11%? And how should we think about the growth margin in the second half of 2021 versus the first half?
The gross margin, and we are expecting, some, more competitions among tier 1 companies. And one of the bottleneck is still the materials, So we are expecting, the second half year with more the debottleneck, for the materials, and the cost are expecting to be improved compared to the first half year, and we have more possibilities, and with the integration level increase, with the debottleneck of the key materials, and to improve our gross margin in the second half year.
Okay, thanks. And
Pardon the interruption, Grace. Are you still there? We lost you for a minute there.
yeah. Thanks for the color. And the OpEx, how should we think about the OpEx? Is it do you expect still around return to like a normal kind of like normal range, like 11 to 12% of the sales, net sales?
Yes, it's still in that range, 11 to 12% against the total revenue.
Okay, thanks. I'll pass it on.
Thank you.
Thank you. Your next question is from Philip, who has a follow-up question, who's from Roth Capital Partners. Please go ahead.
Hi, everyone. Thank you for taking my follow-ups. One of the questions I had was around polysilicon, and given where pricing is and the dynamic there of pricing continuing to go higher, was wondering if you could share how much polysilicon you've secured for 2021, possibly in metric tons.
So, Phil, I think from the supply side, we have secured enough polysilicon supply, but the challenge is, because of this market situations, all those secured polysilicon supply is always up to the market condition. So that's a big pressure, or it's a big challenge for everyone. But currently, it's almost mission impossible to secure a long-term polysilicon pricing. So we secure the volume. I think it's enough, but from the pricing wise, it's still always up to the market.
Mm-hmm. And what's your view, Jenner, as to when that pricing can become relieved? I think Tongwei has some capacity coming online at the end of this year. Do you think we have to wait until Q4, or is there? And if we get relief before that, what causes that relief?
We think it will relieve step by step. It won't change overnight, but gradually, I think that the pressure will be released. The challenge here right now is, the demand side is very, very hot right now. So that's why, the upstream is always holding their expectations that, the demand will support the price. So it will, in short term, we are still expecting a volatile market, up and down. But in long run, like you said, the pressure will release step by step and follow the market principles.
Okay. And then as it relates to Q2 shipments, we talked about this earlier, Jenner, but, when I look at Q1, relative to what we forecasted, the Q1 levels are what you guided to were lower. For Q2, should we expect something similar? Meaning, if you think back to what you expected to do in Q2 back at the end of last year, do you expect the shipments to be lower in Q2 now versus then, because the raw material outlook is so challenging, and as a result, your customers and you are pushing out orders. So do you expect to build less in Q2 than you previously had imagined?
I think, Phil, the principle we are holding in the company is to keeping the module capacity more flexible than others, right? So our wafer and the cells are in the full full rent. And for the module side, we are holding more flexibilities up to the what we say, right, the margins and the market conditions. That's why, the shipment contains, all three segments we have. So I think we will hold the same principle for Q2 as well. The number-wise, I don't think it's the right time to talk about it. Maybe we can talk about it next time.
Okay. All right. Appreciate that. And then in terms of the China listing, Charlie, I know you mentioned some details on that. Was wondering if you could share if there's what's the potential for the China listing to be in Q3 or 4 of this year? Is it meaningful, or is it more likely in the early part of 22? I know you guys have talked about perhaps taking a 2-year process, but wanted to see if the others are going this year, like DACO, and then I think Canadian Solar has a chance of getting out there this year. I'm thinking you guys have a chance to get there this year as well, a China listing, but wanted to get some color from you guys. Thanks.
Okay. For the China listing, we have separate team, working on this process. It's more complicated compared to the U.S. listing, and the process is still it's on track and everything is very smooth, and we're expecting to reach some significant milestone and in the next couple of months, and we will keep the market in progress. And in terms of timetable, how long we will get the China listing done, it's really out of a lot of process is out of the company's controls, and particularly from the typically there's a couple of rounds of submission and response different comments from the regulators, and the regulators they have different tendencies to control the total volume of China listings. So it's from the company perspective, we try to drive the process in more as quick as possible and more efficiently. But some of the process is depending on from the government regulators' perspective.
Okay. Thanks very much for the follow-up questions. I'll pass it on.
Thank you, Phil.
Thank you. Our next question is from Johnny Chen, who's from Greencore Capital. Your line is now open, Johnny. Please go ahead.
Yeah. Hi, everyone. Can you hear me?
Yes.
Hi.
Hello.
Thank you for taking my question, and I have 2 questions for you. So firstly, we know that the company has been developing N-type solar cell technology, especially in TOPCon. So would you please elaborate a little more on the the capacity plan and the efficiency and the success rate? And my second question is that is there any possibility that the company develop another N-type technology we call HJT? Thank you.
Okay. We build up our R&D capabilities on N-type couple of years, and I think 2019, starting from 2019, we have built around 800 megawatts, TOPCon based capacities. The efficiencies have been reached to I think roughly 24%, and now this year we are building more capacity on the solar cell capacities, and the capacity is large size based solar cell capacity, as well as we have flexibility to upgrade, very quickly upgrade to the TOPCon based technology very quickly. And in terms of HJT, we still believe it's not cost effective at this stage, and we have the R&D and the technology available, and continue to watch out the maturities, particularly from the equipment perspective, the raw material perspective. So we don't have plan to roll out, the large size capacity on HJT in recent, 1 or 2 years.
Thank you. I have a follow-up. Would you please? I want to make sure that I heard you right. So, what is your capacity expansion plan for TOPCon again this year in 2021?
Oh, 2021, we didn't have plan to increase our TOPCon capacity, but I just emphasize the new capacity, all the capacities are very, easy and convertible, and we have flexibility and put the available, room, to upgrade to the TOPCon immediately.
Yeah. So the capacity expansion is based on the PERC technology, right?
Yes, you're right. P-type. Yeah.
Yeah. Thank you. That's all for me.
Thank you.
Thank you. Your next question is from Kim Pao, who's from Broxim. Your line is now open, Kim. Please go ahead.
Hi. Can you hear me?
Yeah.
Hello? Yeah. Oh, hi. Thank you for taking my call. I have a couple of questions. One is, you mentioned in your opening remarks that SOEs are willing to accept now lower than normal returns with the new solar farm projects. Can you give us a little bit more color on that, like what kind of returns they're willing to accept now? And second, my second question, I want to ask a little bit more about your view as to the current supply-demand situation of polysilicon materials, and when do we think we would see a return to normal pricing for polysilicon, and also at what level currently, if you were to maintain a margin from your end of, let's say, 2020's normal operating margin, what kind of polysilicon price would you need to actually get there?
Thank you. So regarding a question about Chinese SOEs IR expectations, actually, I think that there are a lot of Chinese SOE IPPs who has set up very ambitious renewable targets for this new 5 years plan. And according to what we have heard from the market, I think their IR expectations has been lowered from previously around 8 to 10 to right now around 6 to 8. So I think that's a very big, let's say, jump, or let's say a big decline in order to pump up more renewable projects and in renewable sector, which gives a lot of hopes and ambitious targets for the whole industry, especially in China. Regarding your second question about supply-demand relationship, especially for polysilicon, I think in the previous question to Phil, we have provided our views that for the polysilicon, it's because of the tension of the polysilicon supply is mainly driven by the unbalanced growth or expansions between upstream and downstream, because the ramping up phase for the upstream is much lower than the downstream. That's mainly the reason. And for the price range, or how much, when it will goes back to so-called, let's say, 2020 level, it depends on the supply and demand relationship as well. So that's why we see in short term, our view is the the volatile upstream, the volatile market driven by the shortage of the polysilicon or the upstream material will continue in the short term. But in mid and long term, we deeply believe the market principles which will automatically balance between the supply demand across the different sector in this industry. And we believe in long run, renewable is still a very promising industry. Hopefully that answers your question.
Can I have a follow-up?
Sure.
Hello?
Yes, go ahead.
Oh, okay. I'm just thinking, so like in terms of time, given the fact that there are not that much new supply for polysilicon coming on stream until towards the end of the year, do you think we should be able to reach some kind of, when you say mid to long term, do you think we should be able to reach a more reasonable polysilicon price and margin levels for us as a result towards the end of the year?
Well, firstly about the polysilicon, I think there are capacities starting ramping up, and the new capacities start to release the polysilicon materials to the market. It's just step by step. It won't be it won't happen overnight. So I think you can look into the main polysilicon manufacturers ramping up plan. I think that there's a lot of public information available. And regarding your margins question, I think the margins will follow the market principle as well, right? So it will go up and down. For example, recently the solar glass price has dropped significantly, which helped the module makers more or less, let's say, ease the pressure from the upstream a little bit. So it happens. We prefer to look into this industry in the mid or long term instead of 1 month or 2.
Thank you.
Thank you.
Thank you. There are no further questions at this time. Ladies and gentlemen, this concludes our conference call for today. Thank you all for your participation. You may all now disconnect.